Hi. So in this video, we're going to try and talk about the difference between bonus and a stock split. Both similar actions. The end result in some cases might be similar, but there's a subtle difference between these two. Bonus और stock split में क्या फर्क है ये हम इस वीडियो में जानेंगे. Just be with me till the end and then you'll realize that one of them is slightly better than the other in terms of the consideration of investors, right? So let's try and understand. And you would have come across this news. हम देखते हैं मार्केट में अनाउंसमेंट होता है. Reliance Industries recently did a 1:1 bonus, where one share, for every one share that you held, you got another share kind of given by Reliance. And then you had another news a few months back where Dr. Reddy's was saying that they're going to announce a 1:5 stock split. So one stock was going to get cut or split into 5 shares essentially, right? So what is the essential difference in these two activities? We'll take a like for like comparison. For that, we're going to assume that a company does a 1:1 bonus and it does a 1:2 split. So 1:1 bonus में आपके पास एक शेयर है, उसके साथ आपको एक शेयर और मिल रहा है. 1:2 split में आपके पास एक शेयर है, उसे डिवाइड करके दो शेयर में बांट दिया गया है. तो that's what is basically kind of happening in this scenario. Let's also look at some other basic information about the company. So let's assume abhi at this point of time the company has 10 lakh shares outstanding. The net profit of the company is 1 crore. So earnings per share is net profit divided by shares outstanding, which is EPS 10 rupees per share. मान लीजिए stock price 200 रुपए है, right? And because there are 10 lakh shares, so 20 crore is the market cap of the company at this point of time. Assume face value is 10 rupees. और दो तीन डेटा पॉइंट्स और हमें दिए गए हैं. एक फेस वैल्यू दिया गया है, एक शेयर कैपिटल दिया गया है. Assume share capital of the company, which is basically nothing but shares outstanding A into the face value, which is B. So that multiplies to give me C, which is share capital, A into B. And reserves and surplus is, let's say, given to us, and that's available as a data point. So reserves and surplus मान लीजिए 5 crore है for the company. That the total value of reserves that the company has is at this point of time 5 crores. PE is nothing but stock price divided by EPS, right? So we get that value as 20, right? Now let's assume the company does a 1:2 split and the company does 1:1 bonus. So we're going to look at them separately and then compare कि दोनों scenarios में क्या फर्क है. So let's look at a 1:2 split, right? So the moment there is a 1:2 split, your number of shares double, right? So number of shares double हो गए. For every one share, now you have two shares in your hand, correct? But the company's business has not changed, correct? So market cap same है and net profit same hai. If market cap is same and net profit is same, automatically the stock price and EPS have to adjust. Profit same hai, number of shares se divide kar rahe hain. So basically if number of shares has doubled, then EPS has to become half and similarly share price has to become half. This is just a mathematical discussion that we're having. We'll see what is the benefit or no real benefit. We'll see how that plays out in the context of a split, right? Split में because एक शेयर को दो में डिवाइड कर दिया गया है, face value आधा हो जाता है. So the face value will become half in this particular example. When you're doing a 1:2 split, the face value will become half. In our example of Dr. Reddy's, when the split was 1:5, one share was split into 5, so a 10 rupee face value will become 2 rupees face value, right? Or a 5 rupee will become 1 rupee, correct? Here the face value becomes 5. Now again, remember you have shares outstanding and you have face value. You multiply the two, shares outstanding has doubled, face value has halved, so share capital remains the same, no change. Reserves remain the same, no change. PE remains the same, no change. Right? So there are a few items that do not change. Face value becomes half, share price becomes half, EPS becomes half, number of shares double in the case of a 1:2 split, one share being split into two shares, correct? Now comes bonus, right? Now when a bonus happens, what happens is you are being given a new share with the same face value for every share that is being held. Remember in our example, we are considering a 1:1 bonus and a 1:2 split. That can be different in different cases, but I've kept it simple here, right? So in a bonus, what's going to happen is, let's understand. So number of shares will again double, yes, but this is a new share being given to you. So when number of shares double, the impact on EPS and the impact on price is going to be the same because again the business has not changed. So your market cap remains the same, your net profit remains the same, and hence your share price will again half in this case, and EPS will also become half in this case, correct? So these two halve as you kind of go along. But the interesting difference that happens here is face value remains same. The face value remains same. And because the face value remains same, let's actually quickly check this. If the face value remains same here, then when I multiply the double number of shares with the same face value, now the change starts happening in my share capital. So my share capital has become double, correct? Ab balance sheet balance nahi hogi. Now the balance sheet is not going to balance because one of the line items has gone up, so you need to adjust it from somewhere. Where do you adjust it from? You adjust it from reserves. A similar reduction has to be done in reserves. In other words, what you're saying is reserves are available. The company can choose to give a dividend out of it, but a dividend would be a cash dividend. A bonus is effectively a stock dividend. It's like a non-cash dividend. We have given a 10 rupee face value share as dividend. So that amount has to be reduced from reserves and that amount is put into share capital. That's the only difference that happens between a bonus and a stock split, right? But this small difference has a meaning in terms of your interpretation, right? Everything else, if you see, is very similar to the split with the exception of face value being different in the split. It goes down in the split, but in the bonus the face value does not change. So you have to make an sort of a rearrangement of items from reserves to share capital in the context of a bonus, correct? Now, what's the subtle difference? Remember, a stock split is just a mathematical gimmick. कंपनी ने कुछ नहीं किया है, आपके पास एक शेयर है, उसे दो में डिवाइड कर दिया गया है. This is just a simple mathematical exercise that has been done. There's no real change in the underlying business or anything, or there's not even any kind of posturing that the company has done, right? In a bonus, they've effectively given you a dividend, but in a stock form, right? It's kind of a non-cash dividend. So reserves come ho gaye, right? But that's been given to you in the form of a share. Now, there are subtle advantages that can come because of this. What typically happens is companies, many of them try to keep dividends constant as a percentage of face value, right? Suppose यहाँ पे आप dividend 3 रुपए दे रहे थे before the split or bonus. That's 3 on 10, so that's 30% of your face value. In the split case, you'll get 1.5 per share. But if the company is keeping dividend per share constant, if they are keeping it constant, then in the second case, your dividend might actually increase. So sometimes, the market might look at the purview of bonus in that context, that maybe the company is signaling that there's a dividend increase. Companies who give bonuses keep doing it, right? Stock split, you can only take the face value down to 1, but bonus you can keep giving. So companies who keep giving bonuses have a history of giving bonuses. They keep doing that, and hence the market views that positively as well. Till some time back, there used to be also this concept of long-term and short-term capital gain tax. There was an advantage around that, but that's now gone away. So that doesn't exist anymore because bonus stripping has now been sort of, it's been curbed in the sense that you have to take advantage of that. You have to buy the share 3 months before or hold the share, I think 6 or 9 months till after the bonus is done. So we'll not consider that. The broad idea why a company is doing a stock split or a bonus is to try and increase the liquidity. Suppose your stock is worth 2,000 rupees. Now you cut it into 2, so it's become 1,000 rupee. The company is saying that, okay, I'm trying to increase the liquidity. Right now, that's a debatable statement. Technically, if a lot of the companies do stock splits when the stock price is like 500 rupees, why would you really want to increase liquidity at 500 rupees, right? So no harm done, you can do it, but in reality, a stock split is a very simple, straightforward mathematical gimmick. In the case of a bonus, you are trying to say that, okay, maybe the company has given some sort of a dividend in the form of a new stock, right? And the company may have a history of giving bonuses, so it might give that again. And the company might increase dividend per share in the future, so that may be a benefit that might come out. In the first place, the company needs to have enough reserves to be able to give out a bonus. So generally, a bonus is considered a slightly more positive event than a stock split. In bull markets, however, dono pe hi market becomes very happy, and the stocks start running away after a split. In reality, a split is just a simple mathematical gimmick. There's no real meaningful exercise that's happening other than a little bit of increased liquidity. बट अभी अगर 500 रुपए पे शेयर है तो उसमें कितनी लिक्विडिटी इंक्रीज हो जाएगी, राइट? सो आई मीन ऑनेस्टली, इफ यू आर नॉट एबल टू बाय अ 500 रुपी शेयर एंड liquidity is stopping you from doing it, then you don't have 500 rupees with you, and maybe, you know, in that case this particular investor shouldn't even be in the stock market, right, without 500 rupees. If you split it to 250 rupees, what real benefit is going to come there? So you have to be careful analyzing it. It's not necessarily a positive event. To summarize, you know, assuming a company does a 1:1 bonus, face value remains same, right? But here face value will become half, right? Because face value remains the same, you have to make an adjustment from reserves to share capital. Otherwise it won't balance the balance sheet at the end of it. Here face value becomes half, so there is no real change anywhere, right? It's just a simple mathematical gimmick. So in a bonus, the share price goes down, the number of shares increase, share capital increases, face value remains the same. Stock split, share price goes down, number of shares increase, share capital is unchanged, face value goes down. So the last two are different in the context of a bonus and stock split. That's basically the difference between a bonus and a stock split. Hopefully you found this to be useful. That's it in this particular video. Thank you.